Good evening. Today, May the 16th of May 2025, analysis of Bitcoin. The very important picture, fundamentally and also technically, we can see is the youngest statements of Federal Reserve. Of course, the market tries, some participants tries to take profits and also to hype a little bit on different news portals. For example, the youngest trip of Trump to Saudi Arabia and Qatar and the deals they have made, but they forget something, that any investment needs time. All those deals of $600 billion or $1 trillion from the United States will not show their effects immediately, but over many months, even years. So maybe or probably at the end of 2026, 2027, the first impacts will be visible. And on the other side, we have seen how also now the effects of the Trump's tariffs policy are recognizable at this moment, as now the consumers are experiencing the exploding inflations and inflationary prices. The Walmart CEO, for example, mentioned yesterday and also 3 days ago that the prices will heat up. And yesterday we had the final statement of Federal Reserve of Jerome Powell that very high shocks are expecting the markets. Technically now, to the Bitcoin, we see that the Bitcoin, after reaching twice the all-time highs, has not been able anymore to get higher, and that was also in all my last analysis, exactly to the tick that I warned some of you to sell the Bitcoins, not to buy anymore. And on the other side, then we have seen how the volatility increased, especially in this very high region of the market. That's a very typical reaction of the market, building a lot of broadening patterns, for example, for a trend shift. And finally the market came down. Of course, here then the bears took some profit. Also the bulls had the chance also to participate again on the bullish momentums, a lot of bullish momentum traders. Nevertheless, a lot of people now try to buy the market here, and that is exactly now to the point that Bitcoin is trapping here a little bit. The buyers, our bias is definitely strong bearish. We have already in my last video, as I mentioned the last Bitcoin analysis, it was, I think, 3 days ago, I told you also some fundamental and technical reasons, and we see now how the market started to build here a very long and very strong broadening pattern, and this is on a daily chart, meaning each time the market is going about 103, immediately the sellers push down the market. Why? Because they have been already accumulating or started to sell Bitcoin on higher regions, taking some profits. also trapped some buyers to pull up the market to the higher prices to sell much more aggressively. And exactly at this point, they are now selling the market. So what to do? The next possible region is that Bitcoin can also come up, possibly around 10 to 30% chance that Bitcoin during the weekend can go, again with question mark, to around 105,688, if not even to 106 to 107, to get sold very aggressively on Sunday evening. And if not, and in some hours we are expecting also some major US data. And at this moment of time, the Europeans are selling massively Bitcoin and trying to push down before the data coming out Bitcoin to around 100 to 102 levels. If breaking that level, it will be dangerous for Bitcoin to get to fall back to the next step at 97,711, and breaking that level will push down Bitcoin to around 94,834 to 95,000. This will not be the end, because up from then the market starts a short pullback, and this is a sign of massive trend continuation down, putting Bitcoin to around 90,000. The ultimate target, the next ultimate target is at around 84,000. This will be the major target number 1. The major target number 2 is at around 78,000. This is major target number 2. The 78,000 already is a gap that has not been filled completely. So this will be a big zone, and this zone is extended to 69,500, and from then, if that level is broken, then Bitcoin will reach the next ultimate target at around 53,800. So this will be then something in this region at around 53K. But as I told you, so during that time we will have also many pullbacks. We will have also some bullish pullbacks, and the day traders should be very cautious on both sides. A lot of day traders, for example, wait many days, many hours, and many ways for their setup, and when the market starts to run after some minutes, they immediately take profit. And this is something very crucial. You may be avoiding that fact. So if I compare this, the day traders can be compared to the New York taxi drivers. Why? Because the New York taxi drivers have a daily target. For example, the taxi driver says, okay, as soon as I have earned $250, I stop working for today. And there are also days, for example, rainy days or stormy days, where they potentially can make much more money. Why? Because especially in rainy days, in bad weather, if it is cold, much more people need more taxis. But the taxi driver has earned his $250, gone home, And if he would stay there and work longer, maybe he could make much more money even for a whole week or a whole month, especially in these times. Compared now to trading, the rainy days and stormy days are especially those, right, that begin here, right? These are the normal days, right, when the market has been exalted and then a trend has been shifting. A lot of day traders stuck in there in these levels. The drawdowns of their capital curves is looking like them, up and down, waiting. And in that moment, when the market starts to move, what do? They immediately take profit, go home, and then the market starts to run very massively down in their targeted direction. And these are the stormy days. Why? Because if the market is going down, meaning the market is expecting very, very stormy data, very, very rainy economical days, like, for example, inflation data, like red news or whatever, that is pushing down the market. The same happening also in a bullish market. So if you are maybe a day trader, ask yourself next, if you are a trader or you are a taxi driver, and think about this example.